Okay, welcome everybody. This is Jakub Sahatruk. I have been doing a module for starting up as a freelance translator for the Institute of Translators and Interpreters, titled "How to Value Yourself." This part will focus on explaining two Excel files that have been provided to you. The first Excel file you received is called calculations. The other one is translation administration. There are also two Word files, but I'll go through them at the very end because they come with the translation administration. So the file calculations, the file has been developed by Lucas Vogt, or he has passed the file to the ITI for us to use. And the idea behind the file is that you learn how much money you can actually make, knowing how many words you translate today and what's your rate per word. So you have three sheets at the bottom of the file. The first one is called maximum capacity. It means that you're translating in the maximum capacity. Majority of the translators translate around 3,000 words a day. If you translate more, great, you can make more money. If you translate less, that's not so great because you will make less money, but you can work towards that aim. With time and experience, you will learn how to do more in less time. So initially we have, let me just zoom this in a little bit. We have 3,000 words a day at 8 pence per word. If you want, you can make adaptations here. So let's say you make actually 2,500 words at the moment, and you charge 6 pence a word instead. So you can adapt that, and the rest of the files will, rest of the columns and the numbers will change as well. So you will have how many hours you do a day, about 8 hours, so you get the amount of money and the amount of money per day. And it's the same here. This simple table just shows you how your price will change if you will be slowly increasing the rate and the amount of words that you can translate a day. And it's a significant difference if you progress and develop how to translate quicker and how to get better rates. Okay, so the next sheet is 70-30 rule, which is we don't work all the time we have because it's just impossible at times. You take holidays, you might fall sick, there might be a variety of situations where you actually don't work 8 hours in a day. So that rule takes that into account. So you're actually dividing the number of words that you can do by multiplying it by 70%, so 7/10. And that gives you the less money that you make a day, less per hour, and less of number of hours that you work in a day or in a year. If you change anything here, the table will collapse. So it's important that you change actually those two figures that are in red rather than anything else on either of those two sheets, because as you can see, it says the max capacity, which means it takes from this sheet max capacity this number and then multiplies this. So it's important that you make changes only to the max capacity sheet. And then finally, you have a first year progression. This is it's a forecast that should allow you to make a forecast how much money you will make in the first year. So the assumption is that you're easing into the job, which means that you don't start 100% at 100% capacity. You actually take time to to get there. So first, there are 4 quarters. This is usually for the accountancy use quarters, and so it's 4 quarters, and you go 25, 50, 75, and then 100 capacity, which means you do a quarter of the work that you are capable to do, because it takes time to gather those clients, to gather this work, to get into a smooth sale, so to say, with getting the jobs. The rest of the figures is just gives you how much money you can make in terms of monthly, weekly, and daily. What's your daily rate? What's your per word rate? So, considering that you translate 2,500 words a day at 6 pence an hour, 6 pence a word, you will take this amount of money. I just would like to go back to the max capacity and change this back to 3,000 and 8 pences. It will give you a good look at how big is the difference. So it's nearly £10,000 difference in terms of amount of money that you can make if you increase your output by 500 words a day and you increase the price by 2 pence a word. It all adds up, and the increase in sales can be significant because of that. And then you put your budget. So it starts with initial investments. You will have some money that you will have to spend. You will have to get a desk, computer, pay for the CAD tools, pay for some other software such as Microsoft Office or anything like this as well. The good thing about some of those things, such as software, is that you don't really have to pay for it immediately anymore. You can buy a subscription, which is normally per year a little bit more expensive, but it gives you this ability to spread out the costs, which improves your cash flow, so your amount of money that you have available for the expenses. And some other stuff, so furniture, uniform for work, anything really that you need for work. I mean, it sounds ridiculous that you need a uniform, but if you're going for networking events, you need to dress to impress, and if you do, you have to buy that, and that costs money. And the only purpose of it is actually work, so there is no reason why you shouldn't be taking it out of your tax bill. And then operational cost. So you will have a variety of things. Marketing, you will have sales and accounting, because it will cost you money to get the sales. You will have to pay for the accountant, most likely. You have to pay for your own development. So you're attending CPD events, you're attending SUFT. It's a perfectly good expense for the tax purposes. You also have some IT that you will have to pay on a regular basis, or quality assurance and compliance. For example, you need to have a DBS, which is a security clearance check if you were working with people, which is a very common thing in the UK. It might be that you will have to provide one, that you don't have any criminal records. It costs money to get, and that's why you budget for it. The figures here are rather, they're very round. You should be going by the proportions, so 15, 10, 35, etc. Because it's easier to understand how much money you should be putting aside. So if you really will make £25,000 in the first year, and you are looking at, for example, marketing 15%, which means you don't want to wait till end of the year before you start paying for the marketing at £1,500. What you want to do is every money that comes into your account, into your business account, so any sales that you delivered, you want to put aside 15% of that towards the marketing. So it's important that I would advise you to probably put aside about 40% of every sales that comes into your account to put it into a saving account, separate saving account. It's a very typical practice when you open the bank account. You open both, the same price. And so you put that aside and you have a pool of money that you can draw from where you're investing in your marketing or CEO or accountancy or anything like this. It's very important to have the money on the side rather than, oh, I received some money from the sales, now this money belongs to me, I can go and spend them. It's important to put some of them aside. And then, so this is your tax allowance for 2016, 2017. If you live in the UK, you don't have to pay any tax on any money you earned until you cross that threshold. So if you have taxable income of minus 1800, which means that effectively you don't have income, you made loss, which is okay in the first year, in the second year as well. It's a rather normal situation where the businesses that have been just set up bring a loss in the first or second year as well. The tax approximation is minus 160, which means that you will get a tax refund, but it's only if you had another job where you pay the tax. Otherwise, if you haven't paid any tax, you're not going to get any tax back. So this figure actually takes into account minus 160 pounds, which means that this is a little bit higher than it should be, because it shouldn't be taking into account that you might not receive any tax back. And then national insurance, this is to cover your social security benefits and health security as well. And the £143 is based on a flat rate that you pay every week, and it's about £280 a week, I believe, at the moment, and you pay for once at the very end of the year. And the class 4 contributions are based on your income. So this year, you can see here, the figure for 2016-2017 is £8,060, which means if you earned less than £8,060, you do not have to pay that national insurance class 4 contributions. If you did make more money than £8,060, you take away from your money available for salary, so your net income, you take away 8,060 and you multiply that by 9%. So this is the amount of social security benefits you have to pay. This file is very rather straightforward. There isn't much to it. You can just complete this and see how you're really going on against as the year goes on. So you can keep one eye on this forecast, and then the other eye on the actual figures. To see how you're doing against your projections. It's a very good thing to do, because it will help you to understand whether you're making not enough sales, maybe your price per word is too low. It's important to address those issues as they come, because if you just the money are just coming in and you don't know what's going on in the business, you will never improve because you don't know what's wrong. Okay, so this was the calculations file. I will do separate video for the other file because it's a lot longer than this, and it actually provides you a means to record all your sales and the clients and produce invoices and etc. So I'll do that separately. If you have any questions about this file, just send me an email, or you can ask during the other part, which will be on Thursday. The workshop, and I'll be happy to answer any of the questions that you might have. So thanks for the listening,